CA Rudramurthy, who's a BV and MD, Vachana Investments, who's joining us now to weigh in on the markets. Hi, Mr. Rudramurthy. Thank you so much for joining us today. Mr. Rudramurthy, we can see that nervousness in the markets. The geopolitical tensions have spooked the market. We have come below the 24,000 levels. We are, in fact, we are trading at 23,878 on the Nifty right now. Do you see further drawdown coming from here on? Also, I want to talk to you about, the previous two, we had the expiry yesterday. The previous two expiries have been positive. What do you pencil in for the May expiry?
Good afternoon and thanks for having me in the show. See, first of all, we have to understand the backdrop of why markets are falling. It is because of the jitters what you have for the Pahalgam event, whatever has already happened. But however, one has to keep in mind the rally has also been very swift. In fact, in last 8 trading sessions, except for today, you have seen a rise of 2,500 points in Nifty. On an average, it is a 300 point kind of a rise on a daily basis. Whereas when it comes to Bank Nifty, we have gone much more ahead. It is a 6,500 points rally in last 8 trading session before today. So some amount of profit booking is definitely good, but one has to keep in mind that this is a market which you have to buy on dips and it is not a sell on rise market. And we have already changed the structure what we had seen earlier from October to March. Also, this quarter results, whatever has come till now, is far better than what it was in the previous or even for that matter before that quarter. So to make it very clear, I am very bullish on this market, but you have to buy this dip. Yes, I understand if escalations happen and you get any big gap downs on Monday, that will be a fantastic buying opportunity, and you have to be very sector specific and stock specific. So for me, sector like, for example, private bank, even for that matter, PSU bank, insurance stocks, NBFC, OMCs, these are all places where you have to be there. And definitely I will use any rally in IT, any rally even in metals as an exit opportunity. But definitely this is a buy on dip market for me.
All right, a buy on dip market as we seen the bit of that structure changing in the market. But Rudra, help us understand that if one has to really adopt this strategy, then where should one start looking at this point in time? Because for today, with the kind of concerns that we have on the war front, help us understand that where is that you are looking at this point?
Also, let me give levels for our viewers. One, in terms of Nifty, 23,400, 23,500 is a very strong support. So even if the escalation happens during this weekend and we get any gap down, use that opportunity to buy in, wait for this news to settle down, and Nifty levels closer to the 23,400 is a great opportunity to buy, and similar levels on Bank will be 52,800, around those levels of 52,800, 53,000. There will be a very good opportunity to buy. So stock specific, I like Paytm. Look at the structure of this stock. Paytm from levels of 800 did a non-stop move towards 900. Open interest built up and even delivery volumes going on the higher side is very supportive for price. So Paytm in this correction and on dips to levels closer to 830, 840, I will be a buyer in Paytm, looking at targets of 1,000 to come on Paytm for a positional buy, and one can have a stop loss of 830 for this long call. Another private bank which has come out with fabulous results, and also on chart there is a very strong support at levels closer to 1,350, 1,370, and that is ICICI Bank for me. Yes, private banks will do good. In fact, it's a choice whether you want to be with HDFC Bank, Kotak Bank, ICICI Bank, but I have picked up ICICI Bank at current market price, and on dips to 1,380, 370, buy on to ICICI Bank. Look at targets of 1,500 to come on ICICI Bank. So definitely bullish stands on market. Use the gap down if you get it on Monday to buy these great sectors and stocks which I have mentioned.
All right,
Wow.
but All right, but Rudra, we just wanted to flag off one thing for our viewers as well. In amidst this, all these concerns regarding the geopolitics and what's been really happening, it's definitely not that great to hear, and we have all our feelings. But with respect to the markets, what we have seen that after these concerns, the markets rebound sharply in the next 1 month. Be it some of the other past events like Mumbai, Srinagar, Uri, Amarnath, all these attacks. After a month, Nifty has given return. So Rudra, but in the near term, do you believe that for Monday there could be a gap down, and from in the next 1 month somebody has to take a positional bet? What should be the levels to watch out for?
See, let me be very, very clear. This is not a market to short. That is very clear to me. But definitely this is a market to buy on dips and not at current market price if you are a very short-term trader. Good that you have already got a dip today, keeping in mind the escalation which might happen at our border. But then one has to understand that the market texture has completely changed, and might be this is the reason why we are seeing the fall in market because of the tensions escalating. But overall market structure has changed for last 2 weeks. End March, you have already seen that sell-off which happened from October to March, and now this market has turned to buy on dip. So number one, what traders can do for short term is reduce your leverage, reduce your long exposure, have money with you, have gunpowder with you, so that you can buy stocks when you get that gap down. Use that gap down as an opportunity to buy, and now is not a time to short for sure. So reduce leverage, have cash with you to put that money when you get that gap down next week, and you have to be very sector specific and stock specific. Book profits in IT in general, because the entire rally in IT and metals, what you have seen last week, is more of a short covering rally, and a lot of shorts which were there in IT has already got covered. Same thing I have even seen in metals. So I will in fact use this rally which came last week in metals and IT to shift into private banks, public sector banks, or even for that matter NBFC, insurance. So these are all sectors which are doing very, very good. In fact, even power for that matter, it's a choice whether Tata Power, NTPC, or even power finance companies like PFC, REC, they are all available at mouth-watering price. So power as a sector can do good for me. In insurance, look at SBI Life, fabulous results and stock is doing great. Look at even HDFC Life. Private banks, look at ICICI, look at HDFC, Kotak Bank, and from public sector banks, look at SBI and look at Bank of Baroda. And for me, all these, even for that matter, OMCs, look at BPCL, HPCL. These are all sectors which will definitely do good, and use the dip in market to buy into these sectors if you get. And this is not a market to short.
Mr. Rudramurthy, there are quite a few recommendations there. Point noted, keep the powder dry, and it's a buy on dip market and not a sell on rise market. The texture remains intact as far as market is concerned. Point taken, but thank you so much for taking the time out and giving us so much insight into the market. Thank you so much.
My pleasure.
All right, moving on then.